In a surprising turn of events, Bitcoin has seen a massive surge in accumulation following a recent sell-off. Investors acquired a staggering 259,298 BTC within a short span, igniting speculation about the cryptocurrency's future. Here's a comprehensive breakdown of what this means. Looking forward, the key question is whether this accumulation will lead to a sustained breakout in Bitcoin's price or simply establish a new trading range. Recently, Bitcoin has experienced a notable surge in accumulation, driven by renewed interest from institutional investors and retail traders alike. This shift comes after a prolonged period of market uncertainty and significant price fluctuations. If demand continues to outpace new supply, this could set the stage for another upward leg in Bitcoin's price trajectory, reminiscent of previous bull runs that were precipitated by similar accumulation patterns. Experts are closely monitoring the market for any signs of a breakout, which could happen within the next few weeks if current trends persist. Conversely, if accumulation slows, Bitcoin may remain in a consolidating phase while the market awaits further macroeconomic catalysts, such as regulatory developments or shifts in monetary policy that could affect investor confidence. Investors should watch for indicators such as changes in trading volume, shifts in market sentiment, and broader economic developments that could impact risk assets. The overall crypto market has been notably influenced by institutional adoption, with firms increasingly recognizing Bitcoin as a store of value amid inflationary pressures. As we ponder this situation, one crucial question remains: will Bitcoin's recent surge in accumulation be the spark for a new bullish trend, or just a temporary phase in a volatile market? The next few weeks could prove pivotal, as key data releases and geopolitical events may influence investor behavior. If Bitcoin can maintain its momentum, it may not only solidify its position as a leading digital asset, but also pave the way for a new era of broader cryptocurrency acceptance. The market is poised for potential transformation, with many anticipating that the coming months could be decisive for Bitcoin's future trajectory. The recent accumulation of Bitcoin has roots that trace back to early June 2026. Bitcoin's price saw a notable pullback, dipping below the $60,000 mark, which prompted many investors to reassess their positions. This pullback triggered what Glassnode describes as one of the most substantial accumulation responses seen in this market cycle. In the weeks leading up to this event, macroeconomic sentiment was improving, benefiting risk assets, including cryptocurrencies. As positive sentiments began to circulate, on-chain data indicated that Bitcoin was being actively removed from exchanges, with buyers across various cost-basis bands accumulating more BTC. This shift in behavior highlights a critical change in market dynamics, where the focus has moved from speculative trading to strategic accumulation. Historically, such accumulation phases have often preceded significant price rallies, making this current scenario particularly intriguing for market watchers. The backdrop of rising inflation and ongoing geopolitical tensions has led many investors to seek refuge in digital assets, viewing Bitcoin as a hedge against traditional market volatility. The changing perception of Bitcoin from a speculative asset to a store of value is reshaping investment strategies. The impact of this accumulation is multifaceted. Increased demand, coupled with a reduced supply on exchanges, creates upward pressure on prices, potentially leading to a bullish market cycle. As institutional interest grows, the market could see enhanced liquidity and stability, which would further attract retail investors. Looking ahead, analysts suggest that if the current trend continues, Bitcoin could potentially break past its previous all-time highs. The market's ability to sustain this accumulation phase will be critical in determining the future trajectory of Bitcoin. With institutional players increasingly entering the fray, the coming months could witness profound developments in the cryptocurrency landscape. The recent surge in Bitcoin accumulation is significant for several reasons. In just 10 days, investors purchased an impressive 259,298 BTC, indicating a strong dip-buying sentiment that could be pivotal for market stability. This surge comes as Bitcoin trades within the price range of $59,000 to $67,000, a zone that many market participants consider an attractive entry point. This behavior, characteristic of established investors, often referred to as strong hands, suggests that these individuals are positioning themselves for the next upward movement rather than exiting the market during uncertain times. Such accumulation phases typically signify confidence in the asset's long-term value, reinforcing the idea that these investors anticipate a bullish trend ahead. The implications of this accumulation trend extend beyond mere price dynamics. Creating a firmer price floor is essential for fostering long-term bullish sentiment. When a significant number of investors are buying rather than selling, it reduces the chances of drastic price drops, thereby making the market more resilient to external shocks. For the average investor, this trend is encouraging, as it indicates that the market is absorbing recent volatility effectively. In an environment where cryptocurrencies are often viewed as highly speculative, this accumulation could lead to a more robust price recovery. Moreover, the broader implications of this trend extend throughout the entire cryptocurrency market. Increased demand for Bitcoin often has a ripple effect, as Bitcoin is typically regarded as a market leader. As Bitcoin prices stabilize and potentially rise, altcoins frequently follow suit, benefiting from renewed investor interest. This dynamic can lead to increased market activity, attracting new participants who may have previously been hesitant to enter during turbulent times. Looking ahead, if this accumulation trend continues, we may witness a stronger market foundation for Bitcoin and other cryptocurrencies. The potential for a price rally could entice more institutional investors, further legitimizing the cryptocurrency space as a viable investment avenue. As Bitcoin approaches critical resistance levels, market participants will closely monitor investor sentiment and macroeconomic factors that could influence future price movements. The coming weeks will be crucial in determining whether this accumulation phase is indeed the precursor to a significant upward trend in the cryptocurrency landscape. Between June 5th and June 15th, 2026, Bitcoin experienced a significant accumulation phase, with investors purchasing a net total of 259,298 BTC. This surge followed a volatile period when Bitcoin's price dipped below the $60,000 mark, prompting many to view this decline as a prime buying opportunity. According to data from Glassnode, Bitcoin's demand score reached the highest possible rating, indicating intense buying pressure from various market participants. This situation is particularly remarkable given the recent sell-off, which left many investors grappling with uncertainty regarding the market's direction. Unlike previous accumulation phases, this one is characterized by a broad base of buyers, suggesting that more seasoned institutional investors are entering the market rather than relying solely on retail traders. The backdrop of this accumulation phase is critical to understanding its significance. Over the past year, Bitcoin has witnessed high volatility driven by macroeconomic factors such as inflation concerns and regulatory scrutiny. Investors have been navigating a complex landscape where the cryptocurrency market's behavior is increasingly influenced by global financial trends. The recent price stabilization between $59,000 and $67,000 signifies a potential support level, which could indicate a firmer price floor moving forward. This accumulation response is one of the most significant observed in the current market cycle, reflecting a shift in sentiment among investors. The impact of this accumulation phase could be profound. A strong buying interest from institutional players may bolster Bitcoin's price stability and lead to a more mature market. If this trend continues, it could encourage further investment into the cryptocurrency sector, attracting more institutional capital and potentially leading to increased mainstream adoption. Additionally, if Bitcoin can maintain its price above the established support level, it may pave the way for future price rallies, enhancing investor confidence. Looking ahead, the combination of strong demand and a growing base of experienced investors may create an environment conducive to sustained growth. Market observers will be closely monitoring how Bitcoin behaves in the coming weeks, particularly as it approaches critical resistance levels. Should it break through these barriers, we may witness renewed bullish momentum, solidifying Bitcoin's position in the financial landscape. As we consider the future of Bitcoin accumulation, what do you think will happen next? Will this lead to a new bullish trend or merely a consolidation phase? Share your thoughts in the comments and don't forget to subscribe for daily deep dives.